In a move that signals both the growing sophistication of the regulated crypto asset market and the inherent risks of complex financial instruments, 21Shares has launched the first leveraged ETF based on the SUI token in the United States, listed on the NASDAQ under the ticker TXXS. The 21Shares 2x SUI ETF promises to deliver twice the daily return of the underlying asset. Using derivatives such as swaps and futures to amplify exposure, this launch comes amid accelerated expansion of crypto ETFs in the US. As the industry rapidly evolves from simple spot ETFs to structured products tailored for sophisticated traders and short-term strategies, the TXXS is not a product for long-term investors or beginners. By design, leveraged ETFs are intended to track an asset's daily performance, its cumulative return over time. Due to daily rebalancing and the high volatility inherent in cryptocurrencies, these vehicles can deviate significantly from the actual asset's performance over periods longer than one day, especially in sideways or highly volatile markets. Shares itself warns in its regulatory documentation that the product is suitable only for experienced investors who understand the risks of leverage and volatility decay. This context gains significance in light of the recent stance of the Securities and Exchange Commission (SEC), which has been closely monitoring the proliferation of leveraged crypto ETFs. While it has permitted 2x products such as the TXXS and a leveraged Dogecoin ETF launched by 21Shares last month, the agency has halted applications for 3x and 5x ETFs, signaling clear regulatory limits on extreme leverage for assets deemed higher risk. This approach reflects an effort to balance financial innovation with retail investor protection, as many underestimate the complexity of these instruments. Focusing on SUI, however, is no accident. The SUI blockchain, although built on its own architecture, it is not an Ethereum layer 2, but an independent high-throughput network, has demonstrated impressive growth in real-world adoption metrics. Using a proof-of-stake PA's consensus mechanism, the network employs its native token for transaction fees, governance, and staking, creating a cohesive economic ecosystem. Data released on Thursday shows SUI has surpassed $10 billion in monthly DEX decentralized exchange volume and maintained over $180 billion in stablecoin transfers for 4 consecutive months, a robust indicator of utility in payments and digital commerce. 21Shares had already signaled interest in the SUI ecosystem as early as May, when it filed for a spot SUI ETF, and announced a strategic partnership with the network, outlining collaborations in market research, product development, and educational initiatives. The TXXS launch thus represents an intermediate phase in this partnership, offering leveraged exposure while the spot ETF awaits regulatory approval. Notably, this move follows 21Shares' recent acquisition by FalconX. Finalized in October 2025, a consolidation that enhances its capacity to rapidly roll out products in an increasingly competitive market, and competition is fierce, according to Eric Balhunas, senior ETF analyst at Bloomberg. TXXS is the 74th crypto ETF launched in 2025 alone, bringing the total number of crypto ETFs listed in the US since approvals began to 128. Even more striking is the trend of assets debuting first in leveraged form before their spot. ETFs are approved, a reversal of traditional sequencing that underscores issuers' pressure to differentiate. We're seeing a race to capture niche markets with specialized products, even when the underlying asset lacks broad institutional adoption, Balhunas observed. Despite its regulatory and strategic symbolism, the market has not responded with immediate enthusiasm. The price of the SUI token, according to CoinGecko, fell 2.3% in the last 24 hours, trading at $1.63. This modest or even negative reaction is common with leveraged ETF launches, whose direct impact on underlying asset demand is limited. Unlike spot ETFs, which buy and hold the actual asset, creating sustained buying pressure, leveraged ETFs do not hold the token directly, but rather derivatives tied to it. Thus, their effect on SUI's price is indirect and often short-lived. Nevertheless, 21Shares argues that offering such instruments is part of a broader strategy to democratize access to crypto assets within a regulated framework. For institutional and high-frequency traders, TXX provides an efficient, liquid, tax-transparent way to express short-term views on SUI without navigating unregulated exchanges, self-custody, or counterparty risks. In this sense, the leveraged ETF is not an isolated speculative product, but a building block in the mature financial infrastructure now forming around digital assets. In summary, the launch of the 21Shares to buy SUI ETF is an ambivalent milestone. On one hand, it demonstrates the maturity of the U.S. crypto ecosystem, now capable of supporting complex financial products under regulatory oversight. On the other, it reinforces the risks of excessive sophistication in a market still vulnerable to volatility shocks. For investors, the lesson is clear. Regulation brings safety, but it does not eliminate the inherent risks of leverage. And as always in the world of crypto, innovation moves faster than collective understanding demanding. More than ever, discernment, education, and operational humility.